Hey guys, RC Peck here with Fearless Wealth. I want to have a conversation with you about the NASDAQ 100, which is the 100 largest companies in the NASDAQ composite. And I'll compare that to the 500 largest companies in the United States. And we're going to use the S&P 500 for the 500 largest companies in the US. And we're going to use the Qs or QQQ, or NDX is the actual index, but the ticker symbol is QQQ. And that is the 100 largest companies in the NASDAQ composite. And I want to talk about this because it's an important comparison. And it's one that's lost on a lot of people. In the past, say in the year 2000 to 2002, the NASDAQ got crushed. It fell about 84%. That was the dot-com crash. It really affected the NASDAQ. Okay, but ever since then, generally and almost specifically speaking, those 100 large companies that are in the NASDAQ have been beating everything, have been beating every index. Now, we're taught that if you have a broader base, right? If you have 500 stocks, you're safer because it's a nice broad base and your money is spread out. But the thing is, what's happening is big companies are becoming bigger and stronger. Companies that are technology companies are becoming bigger and stronger. And one thing that the 2020 pandemic has done is it didn't change anything. What it did was it accelerated what was already happening. So technology was eating the world, right? Consumer discretionaries, the biggest company in consumer discretionaries is Amazon. That's a tech company. The second biggest, I think, is eBay. That's a tech company. You go to the communication sector. The biggest company in there is Google. The second biggest is Facebook. Those are technology companies to me. And so what we have is technology eating the world. It's not going away. It's not a fad. It's a trend, and it's accelerating. And COVID has exposed or accelerated just everything that was working before has accelerated. And so what we have here on the screen is QQQ divided by the bond market. So to be more specific, the 100 biggest companies in the NASDAQ composite being compared to the US bond market. And I have some colors here, so let's talk about them. If the line, actually, let me get rid of this here. And actually, I want to just clean up this price chart just a little bit so there's just less data for us to look at. So if you look at this screen, you have the red, the yellow, and the green. When the black line is going higher, that means the NASDAQ 100, or those 100 biggest companies, is outperforming the US bond market. And you can see right here, this, let's call this a 2-year period, okay? It's a little bit longer, but let's just say it's a 2-year period. You can see that the black line kind of went back and forth, broke out, broke back down, and then is back up here. Okay, when it breaks up here, it means the NASDAQ 100 is clearly outperforming the bond market, right? I kind of think of this as clean air up here. When you get this clean air up here, you can just fly so much higher and so much faster. And so the NASDAQ 100, which the tracking symbol for that is the Qs, QQQ, you can see it's above all this noise, all this entanglement and confusion. And is it going to go up? Is it going to go down? Is the bond market stronger? Is the NASDAQ 100 stronger? And with the COVID crisis, it brought it back down into, between the two blue vertical lines is basically the COVID crisis from a stock market point of view. And it brought it back down into this, like, okay, what's going to happen? What's going to happen? Is the bond market going to take over and take the reins, or is it going to be the NASDAQ 100? And it brought it back in here, but it couldn't sustain and it moved higher. So now that we have, what we have is the NASDAQ 100, or the Qs, is back up here, right? That is an area of strength. That tells you how strong the NASDAQ 100 is compared to the US bond market. By the way, the US bond market is being fully supported by the Fed and their trillions of dollars, and really their unlimited balance sheet to support the bond market. And the NASDAQ is still outperforming that. Okay, now I just want you to remember the red, the yellow, and the green, and where the black line is, and where kind of the arm wrestling was, and that the NASDAQ relative to the bond market is this high. Now what I want to do is I want to compare this to what's going on with the S&P. And again, let me just clean up this price chart just a little bit. Now, if you remember just a moment ago from looking at the Qs were way up here, right? They were already in the clean air area. The S&P 500, and you do not want to be down here if you want to be bullish on the US stock market when measured by the 500 largest stocks. And by the way, the 500 largest stocks, guys, they're outperforming almost everything, almost everything. And so you see the US stock market as measured by the S&P up against the US bond market as measured by B and D, right? And your brain can immediately go, oh, wait a second. The S&P's got to get through all of this noise, all of this confusion, right? This is a huge arm wrestling competition going on between the 500 largest stocks in the US and the US bond market. And just look at how much harder it is for the S&P to be arm wrestling or tug of warring against the US bond market. It is really, really underperforming, right? And again, what's interesting is we've been taught that the NASDAQ is dangerous, right? Because that's a war many wars ago, right? And that was called 2000, where look, the NASDAQ, it got crushed. But if you think about what makes up the NASDAQ today, you've got Microsoft in there, okay? Getting stronger, accelerating. You have Amazon. When I say in there, I mean the top 5: Microsoft, Amazon, Apple, Google. What am I? Netflix is in there. You have these gigantic companies that are getting stronger. They're getting stronger. And as an investor, you want to invest in strength and avoid weakness. The problem is no one's ever taught you. No one's ever taught you or trained you to think visually, right? To be like, wait a second, right? A more stable future is determined by stable investments. And this is just a great example of showing you how a lot of people are going to stay away from the NASDAQ 100, okay? Because they remember the dot-com crash, which was at least 2 major wars ago, if you think of major crashes as wars. And we don't want to be fighting the last war, let alone 2 wars ago. And yet that's what people are doing, and they're avoiding some of the strongest places on the planet to put your money. So guys, this is just another step in helping you really find that clarity and that control, getting that control back over your money, over your future, over your portfolio. Please, guys, go ahead and like the video, subscribe to it if you have not. Please forward it to a friend or a colleague or a sibling to help them bring in more clarity to their financials, their investments. And look, guys, if you find yourself interested and curious and wanting to just really see what kind of changes could happen with your portfolio, I have a very, very simple way of doing that. I call it a portfolio x-ray, where literally we look at your symbols. We pull your symbols up on a price chart, and I show you right there on the screen which ones are the anchors of your portfolio and actually causing you the angst and the overwhelm, and which ones are the ones that are actually doing all the heavy lifting. So there's a link above the comments and at the end if you are curious about making that happen, or you can just go to fearlesswealth.com/x-ray. But whichever it is, just know that there's a better way to invest. And again, my name is R.C. Peck, and this is just, again, another way to bring clarity and control into your life. So thanks, guys, for being in my world. Thanks for listening, and I will speak to you guys soon. All right.